out with a replay or with an email afterwards so that you can watch this in your own time as well. And if people aren't able to join us right at this time, that's an opportunity for them as well to hear what we've got to say. Yeah. So really pleased to have you all here today. Thank you so much for joining us. This is part of our webinar series that we do here at RIC to engage with our customers and farm businesses and all of the community who are interested in learning more about what we have to offer here for our farm businesses. We have a number of farm businesses right from across Australia joining us today, as well as trusted advisors. This might be financial planners, accountants, and those people who may actually be suppliers as well for farm businesses. So thank you all for joining us. We also have some rural financial counsellors with us as well. So great that you can be with us. So before we kick off and I introduce all of our speakers in a more formal way today, I'd just like to do an acknowledgement of country. We're actually meeting here in our RIC head office. We're based in Orange, New South Wales, which is in the central west of the state. We're actually within Wiradjuri country. So we acknowledge that we have attendees from various countries right from across Australia and all the lands in Australia today. So RIC acknowledges the traditional custodians of country throughout Australia and recognises their continuing connection to land, sea and community. We pay our respects to them, their cultures and to their elders, past, present and emerging. So we might just move on to our agenda and what we're going to run through today. We're going to give a little bit of background about RIC and who we are and also our loans, but our focus today will be on the farm investment loan. We have our agri-lending manager, Mitch Adaman, who will take us through this loan, including the eligibility criteria, key loan features, and what to consider if you are considering to apply, and then how to apply as well. We're also really fortunate to have one of our customers, Rachel Lehman, who's joining us from Queensland today. She will share her story and provide a few tips and tricks and that sort of thing for some of the people who might be interested in our loans. We'll also do a little Q&A. So many of you have actually submitted your questions as you registered. So we're going to try and address those throughout the presentation. But if there's anything that pops up or you're not quite sure of, feel free to use the little Q&A feature that's at the top of your menu bar. Just drop your questions in there and we'll aim to get to those later today. You would have seen a feedback poll as you joined. That's very important for us to actually get some valuable information about who you are, where you're from and what your issues are. So appreciate if you have done that. We'll also have a feedback poll after the session to get some more information about what you might want to hear about from RIC in this space. And just a reminder that we are recording today. So just moving on to our presenters. So Mitch will be taking most of the presentation today. He is our key agri-lending manager. He's dealing with farmers every day here at RIC and assessing loans. So he's got a lot of information that will be very helpful for you in learning more about our loans. And also, as I mentioned, Rachel Lehman, who's a Queensland grazier and one of our customers, will also share her story. And I'm Mel Monaco. So just moving on, I might just do a little brief about us. So RIC is an Australian government provider of low interest loans for farm businesses, but also farm-related small businesses. Our concessional loan program helps farm businesses to prepare for, manage through and recover from severe business disruptions. We also help first generation and next generation farmers to start a farm business or with their succession planning arrangements. We are committed to helping Australian agriculture industry build thriving regional communities. We were actually established about 6 years ago and we're a national program. As I mentioned, our head office is in Orange, New South Wales, but most of our team is actually located regionally right throughout Australia. In our first 6 years of operation, we actually settled over 3,000 loans, valued at over $3.25 billion that directly supported Australian individual farm businesses. So that is quite a milestone in such a short period of time. And obviously during that time we had severe impacts from drought and other natural disasters, as well as we have a very popular program, the AgriStarter program. So I might just run through those products now. So these are our key products. Farm investment, which we'll talk much more about today. This is actually also called a recovery or a rebuild loan because, as the name suggests, it's about helping people after they've had a significant impact and helping them to recover and prepare and build resilience for a potential other impact down the track. Its purpose is really around that recovery phase, and it could be from flood, it could be from any other natural disaster, such as a bushfire, drought, or any cumulative events. So we'll hear a bit from Rachel later today because she actually had multiple events that led her to RIC. Other products that we have is the AgriStarter. This is for first-time farmers and also supports succession arrangements. And then one of our other key products is drought, which helps to prepare for, manage through and recover from drought. And then the AgBiz drought loan supports regional Australians to take control of their farm-related small business through drought. So a variety of loan programs for various purposes. So we'll run through some of those and the eligibility criteria in just a minute, focusing on the farm investment loan. So if we look at our loans, all of them have key eligibility criteria before they can be assessed by our agri lending team, and there's criteria also applies to the assessment part of our loans. So I'll have Mitch run through that with you in a minute and give you some more details. But what we've created is a really helpful and very simple tool which is available on our website. We call it the Quick Quiz, but it's basically a tool to help you check your eligibility. So in less than a minute, you can run through the key, what we call gateway criteria that's needed before you can actually apply for a RIC loan. So that's the URL there, ric.gov.au/quick quiz. So you can try that after the webinar. Just moving forward, how RIC works with your commercial lender. This is very important. One of our key eligibility criteria is that you need to have commercial debt. Mitch will talk more about this, but we just wanted to explain that RIC is not a bank. We actually operate with similar processes and we conduct credit assessments on all applications. RIC loans are designed to work alongside your commercial lender, your bank or financial provider, and our customers maintain their bank relationship right throughout the loan term. We do share the commercial risk with financial providers to strengthen individual farm businesses and also to support the agriculture sector. So I might just pause there and hand over to Mitch so that we can have more clarity and information about our farm investment loan. So over to you, Mitch. Thank you.
Thanks, Mel, and thanks everyone for joining. So I'll be adding a bit more detail on the purpose of the farm investment loan, some of its features, how you can use it, talk about the eligibility, which is an important piece, then talk about the application process and some of the support that might be available to you as you, pardon me, as you go through the application process. So yeah, the purpose is primarily, as Mel says, a recovery mechanism. It's and the mechanism is to give you a loan at concessional rates as opposed to commercial rates, and typically we find our interest rate is around between 2 and 4% less than your commercial lender. But it is for the preparation, management and recovery of a significant financial impact. And I'll talk about what a financial impact, a significant financial impact is as we move through. So the features of the loan, just one by one. The loan, the maximum amount you can borrow from us is $2 million. Or the value of your commercial debt typically with a bank or another commercial financier. So if you have $1 million with a commercial bank and you wish to borrow $2 million, you won't be able to get $2 million from us if you still have $1 million with the commercial bank. You'll have to borrow 1.5 from us and another $500,000 from your commercial bank. Our interest rate is a variable rate and it gets reset each 6 months. It's currently 5.18 and it's set similarly to the RBA, but we use a mechanism, the 10-year bank bond yield, which moves up and down similarly to the cash rate. Actually, it has come back a little bit from the last time when we assessed it, but we'll be reassessing it and advertising on the 31st of January. Hopefully, it will have reduced, but we're at the mercy of the financial markets. The loan term is over 10 years. The first 5 years is on interest-only terms. So all you pay is the interest, and you can nominate how often you get charged that interest. It can be monthly, quarterly, half-yearly. We generally recommend setting it to your own cash flows. If you're a dairy farm, for example, you get a monthly check. We suggest you get charged interest monthly, for example. Whereas someone who has their cash flow in a more clumpy fashion, such as a cropper, or you sell your livestock periodically, perhaps quarterly or half-yearly is more appropriate. No fees to establish the loan, no fees to pay out early, no fees for extra repayments. One feature of our loan that's important to realise is if you came into some extra cash and you wanted to reduce some of your debt, you're more than welcome to reduce the RIC loan. However, there is no redraw facility. And we find that some of our clients who are in that situation, they'll often pay down some of their commercial debt, whereby they might be able to redraw that commercial debt should they need the money back again. So the commercial bank gives that flexibility. And also our clients tell us that it makes financial sense to reduce their higher interest rate debt versus our cheaper rate. So uses. Look, in summary, as long as it's for the use on farm, we don't. It's probably the website is pretty clear about what the loan is not used, can't be used for. Now, there's certainly recommend going to the website. Then, for extra detail, there's a link to our guideline, and it's a more comprehensive document. But private and domestic assets, anything non-farm related. Probably the main use is refinancing existing debt. So if you've had a significant financial impact, something's happened, and you can come to us and refinance half of your commercial debt if it fits within the criteria, as long as it's not more than $2 million for the RIC loan. But operating expenses, capital expenditure. Look, sometimes the purchase of additional land where it works into mitigating some of your risks. That is, you might look to purchase some land just a little bit outside your immediate geography, which might diversify your climate risk. But in short, it's for farm purposes. Now let's talk about the eligibility of the loan. There are a number of aspects to this that make it a little bit different from a bank loan. As Mel's mentioned, and I've mentioned earlier, firstly, you must have existing commercial debt. And after you settle the RIC loan, the commercial debt can't be less than the RIC loan. You need to be able to, at least one member of the borrowing group, so it might be, you say, a mum and dad partnership, as long as one of the partners within the borrowing group contributes 75% of their labour onto the farm and earns at least 50% of their income. So it gives scope for farm businesses where off-farm income is required. And yeah, so that's encouraged. You need to be a proper business with an ABN. At least one person needs to be an Australian citizen. You need to have some reasonable experience, 3 years at least. You need to be able to demonstrate that you can service our loan and all loans. So that's we'll check. We'll assess the ongoing financial viability of the business. And how we do that is we'll have a look at your previous financial statements. We'll have a look at your statement of position, and that's the group assets and liabilities. And we'll look at what your future cash flows look like. We'll assess what we call the year in, year out year, which is an attempt for you to show us what a normal year looks like. And we appreciate there's often no such thing as a normal year, but we'll use average yields, average growth rates, or weight gain in the case of cattle or sheep or dairy, average prices, not necessarily the current spot prices. So it's that sort of analysis or assessment that goes into seeing whether you can service the loan. We'll need security on the loan. Typically, that will be your actual farm. Did have a question actually. Can we take security that's not necessarily the farm? And we can. It's most of our requirement is in fact actual property. So it could be a residential property, and in fact we often use residential property or commercial property as top-up security. But there needs to be appropriate security. Look, occasionally we'll take a livestock mortgage as top-up, but generally it's the farm property. Look, water licenses certainly we use. In fact, we often require that. And finally, your business needs to produce a product that gets sold either interstate or overseas, or have a reasonable element of that. Now, if you grow grains, you'll sell into GrainCorp or Grain Trader, and that could end up anywhere around the world. So that's pretty easy to do. The same with most livestock. I guess it just limits if you have a relatively small cottage industry that sells specifically into local markets. In that case, we'd ask you to look at the drought loan. That might be more appropriate. So that's the main eligibility. Again, look at the website and then look at the loan guidelines on the website, which is a more detailed. But in the application process, you'll be asked to talk about these things. And also within the quick quiz that Mel mentioned, that will ask you questions. So we don't want you going through the process of applying for a loan when you are ineligible. We appreciate that it takes time, effort, sometimes takes money when you use an external advisor. So we want to just be clear from the get-go as to eligibility. Look, sometimes it can be a bit grey. So yeah, you'll still go through the process. One of the main things we assess is the business in financial need, or has there been a significant financial impact? Again, the term is significant financial impact. So that needs to have occurred for you to be eligible for a RIC loan. And I guess the four things we look at are the cause of the impact needs to be outside the control of the farm business. And typically drought, flood, weather events, market disruption, biosecurity, things such as that. And the duration of the impact, we generally want to see that the impact is going to take you at least 2 years to recover. So you might have had an event that took place within a 24-hour period. You had a flood, you lost, a significant amount of livestock, and we'll need to see that it's going to take you at least 2 years to either you may borrow money from your commercial bank immediately, restock immediately. But if we'll need to see that it's going to take you at least 2 years to either pay back that loan or get back to where you were before the event. Now, what we look at is, reductions in cash flow. I'm just reading from the guidelines, from the website actually. From the guidelines. Large reduction in net cash flow, reduction in yields. You might have had a weather event that wiped out your wheat crop, your winter crop, or your summer crop. Reduction in margins, which often takes place when you have a reduction in cash flow or production and yields, or large increase in operating expenses. A large reduction in livestock numbers. If in doubt, give us a call. Ask us whether your situation fits. Now, it could be one event, or it could be a cumulative events, like a number of events. And we'll go back over the last 5 years. You can list events that happen in the last 5 years, and typically we'll get an applicant that says, "Look, I got slammed in the 2019-2020 drought. I've recovered, but then I got this flood event." So we like to see everything that's happened. There are some things such as an increase in interest rates. That event, we appreciate that's outside your control. That in isolation at the moment we're not really deeming as an impact in isolation. If that's all you've got, that probably won't be enough. But that, coupled with other events, we will look at. Drought loan or farm investment loan. Look, they are very similar, and if you're wondering whether it's farm investment or drought loan, often someone will apply for a drought loan and we'll turn it around and say, "Hey, you're actually better fitted to the farm investment loan." The terms are pretty much identical as far as amount, interest rate, eligibility. Well, eligibility is slightly different, but tell us your story and we can decide which it best fits. So let's talk about the application process. We like to think it's pretty straightforward, but applying for loans is there's a bit of documentation. Firstly, submit your application, and I'll go through that in a bit more detail. But it's all online, and just recently we've taken to the application form with a knife and chopped it in half. It's half the size it used to be, and we think it's in fact, we had someone just recently fill out the application within less than 60 minutes. So again, it's online. There'll be some initial documentation that you submit with the application. Once we've got it, it'll get assigned to one of our agri-lending specialists. I run a team of some of those, and they'll get on the phone to you, and it'll be a one-on-one relationship with the specialist. They'll go through your application. It's an important conversation to have, because we need to understand your business. The application itself won't give all detail that we'll need to understand your business. So there'll be a bit of toing and froing. The first thing we do is, with the initial application, there's 3 documents we'll ask initially, and they're important documents. They're your financial statements from the last 3 years. So your financials, 1, 2, your current statement of position, and thirdly, your cash flow projection. So what you've done, where you're at right now, and what you're going to do in the future. That's all we ask for in the initial application process. And with that, together with your own story on the application, we'll have a pretty good idea whether you're eligible or not. And the advantage of that is, we can, if you're not eligible, we'll let you know why, and the application can cease, and your time won't be wasted. Eventually, you'll get a loan decision. Hopefully, it's an approval, and then we move off to settlement. Pleasingly, our time, and was one of the questions lodged over the last couple of weeks, how long does it take to get the money? Well, firstly, we need to approve the loan, then we need to settle the loan. And often with that settlement, we have to deal with a bank, because there's we need them on board. But on average, it took, in the month of June this year, just a little over 100 days. And that has reduced substantially. And you might think, well, I go to my bank, I can get money quicker, but appreciate this is a new relationship that we are establishing. I mentioned those 3 documents, financial statement of position and cash flow. The second stage of the application is then getting the other ancillary documents, such as loan ID, ID, personal ID, so we can perform KYC and general identification. And there could be trust deeds and other documents such as that. And so that's the process, the application process. So the type of things that the main things we assess are, firstly, we look at your general equity, and out of that, we'll determine security that's available for the loan. We'll be looking at your experience and your ability to run the farm, and from there, we'll determine serviceability. So the cash flow that you provide us, we'll be asking assumptions on that. Carrying capacity, yield, price, etc., costs. We are keen to know that you're enthusiastic about your business. We do love talking to you about it. And as I say, we've got our staff, the specialists that you deal with. They're talking to farmers like yourself all day, every day. And then finally, just need to know who your commercial lender is, and who we can speak to and start negotiating. Typically, your commercial bank, your commercial lender, they'll already have a mortgage over the farm, and we'll need to negotiate with them a second mortgage. And there's a document called a deed of priority, which sets out the ranking. And typically they go first, so they're quite happy for us to come in as second mortgage. They lose a bit of their debt, but they're often in a very in a safer situation. Work with your bank. Look, sometimes the bank will initially reach out to them, or you'll reach out to them, and they'll say, okay, well, let's wait to see whether the RIC loan is approved. Then we'll confirm our arrangement. So, and we're generally happy with that. We understand that because the commercial bank will have to do some restructuring themselves. But as long as you've given them the heads up that there is a RIC loan in train. So finally, I just want to talk about a little bit more about the application process. It's step-by-step online. You can download a manual application and fill it out, but we think the online step-by-step process is relatively straightforward. Yes, I mentioned it's new and improved. Probably isn't improved if you haven't applied with us before, but you may have heard that it can take a bit of time. But as I say, it's given we've reduced the amount of info required for the first stage, it's we think it's less painful than it has been otherwise, but it's pretty straightforward. Again, use the checklist. There's a checklist as far as the step-by-step. Of course, use your trusted advisors, accountants, your own bank manager, rural financial counsellors, your next door neighbour, whoever you get your advice from. But we have a dedicated contact centre at the RIC, people that work for us. They're on the phone answering questions all day, every day as well. So there's a 1-800 number on the website and on the screen now. We ask you to utilise that function to ask any question. If the question is too curly, they'll chuff it off to me or one of my colleagues. So that's it from me, Mel, as far as the application. So I'll leave it to you to introduce Rachel.
Fantastic. Thanks so much, Mitch. Always lots of really good information there, and there was a lot of information there. So as Mitch said, if you do have any queries, please get in touch with our friendly team at our contact centre to ask those. I do see some questions popping up in our Q&A function. We will get to those very shortly, but first I wanted to I'm delighted actually to introduce Rachel to hear her story. I'm not sure if many of you may have even read her story, which is on our website already, but I'm really pleased to welcome Rachel Lehman. Rachel is a RIC customer from Tansey in South Burnett region of southeast Queensland. So Rachel and her husband are cattle graziers who are using a RIC Farm Investment Loan to recover after experiencing multiple cumulative events, including drought, flooding, and would you believe, even a tornado. These impacts have had significant impact, causing financial hardship to Rachel and her family, and we're sorry to hear that, but we're really keen to hear your story and how a RIC loan may have helped you. So thank you so much for joining us, Rachel. I'll bring you in now. So you experienced one disaster after another. Quite extraordinary, really, but this is some of the resilience that our farmers are facing in the Australian climate these days. Just tell us what it was like, with these impacts on your business and what that meant.
Thanks, Mel. Yeah, I think when we originally started our RIC application, we might have gone way back over the 5 years, but we first bought our property as part of the succession plan, or our first block, in 2011, and it quickly followed with a flood. We flooded again in 2013, which at the time was the worst flood recorded in history. And we finalised our succession planning in 2018, early in that year, and in October that year we were hit by the Tansey tornado. So that essentially it mulched our property. So our entire feed bank was gone within about 5 minutes, and we had to purchase feed. And just the clean up from that, it was not anything that anybody had ever experienced before, and it was unbelievable. We then went into really heavy drought for years, which was broken by the weather event or flooding event, which came from ex-tropical cyclone Seth, which was January 2022 and is by far the absolute worst recorded flooding event in our area. So that was loss of fencing like we'd never seen before, loss of cattle, and unfortunately in Tansy, loss of lives as well. And we were flooded similarly, not as bad, but fairly bad 6 weeks later. So the second week of February. And that's our story of natural disasters and floods and droughts and tornadoes.
Yeah, just sounds absolutely horrendous and devastating, because you lost, as you said, a lot of livestock, fencing, infrastructure. So you must have been at a point then thinking, what next? What can we do, or how can we recover from this? Because it just sounds so devastating to be able to have to almost start again, really, in a lot of ways. So why did you decide to turn to RIC and for a RIC loan?
Yeah, I think what you've said is really relevant. We were feeling like we were starting again, but we also had plans. We had so many plans to do things a little bit differently than they'd been done in the past on the property, and to bring in some new ideas. And so we were starting back from scratch, like traditional scratch, and we just felt like we were never, ever going to get ahead. So the rebuild and the recovery from those two floods was looking like a really, really difficult prospect, and the thoughts of putting in place some of the plans that we had were just well and truly on the back burner if they were ever going to happen. So that's when we first started considering maybe a move towards the RIC would potentially help us, not just with our recovery, but help us to be able to bring in some of those plans. And if we had any chance of doing things a little bit differently, then maybe that was the path that we could take.
Mm-hmm. Yeah, so it did sound like you had your business plans well in place, which is great. Sometimes farmers don't always have that that side of things, but sounds like that may have helped you as well in terms of being able to potentially recover or get back on your feet a bit easier. Can you just talk us through how the cash flow situation in terms of having a low interest loan, how that may have helped?
It's been amazing, to be honest. So it's really the main thing for us has been that cash flow. It has meant that we could look at rebuild. So the rebuild had come off the drought, our herd rebuild. So we obviously had a lot of work to do after the flood in rebuild in general, but we also had a herd that we wanted to rebuild, and we wanted to do things a little bit differently and look at some diversification as well, which was never going to happen without some relief from cash flow. So that's been amazing, and has probably been the biggest benefit that we've found since working with the RIC. Yeah, it has just meant that we could look at the herd rebuild, and the other has been some new irrigation infrastructure, which really helps with our drought proofing and also helps with the ability to have some diversification and to open up our income streams to what they've historically been.
Yeah, that's really great to hear. It sounds like a few years down the track, you're starting to get back to where you needed to be. Fast forwarding to now, how is your business looking, and what are your plans?
Yeah, really good. I almost feel worried about saying that, because as soon as you say things are great, you always get a little bit of a slap in the face and bring you back to earth. But no, things are great. We have looked at new irrigation infrastructure, and we are installing a pivot at the moment, which is amazing. And we are working, so a little bit market dependent, but we are working on that, rebuilding our herd piece as well, and have changed and just diversifying our plan around just sending off weaners each year. We're now looking at doing a little bit of backgrounding as well, which is amazing.
Fantastic. And then in terms of your process with RIC and our team and that side of things, what would you say to others that are potentially thinking about a RIC loan?
We had a really positive experience with RIC, which is great. From the first moment that we put in our application and Nick contacted us, was fantastic, and we were a little bit nervous about it. I think sometimes when you've dealt with just commercial lenders, you can feel like you go through the ringer a little bit, and we had been through the ringer, so we were just a little bit worried about how that would go. But he was fantastic, and he did ask a lot of questions, but we kind of looked at, I think we were tired by that stage, and we just looked at it as, don't be offended by it. It just means we either haven't explained ourselves fantastically, and or that he's got really relevant questions that maybe might reframe our plan a little bit, or make changes around the edges. So we kind of took on his feedback and questioning in the most positive possible way, because there were a lot of questions, but it was still a quick process, and he was great to deal with, and he was always on the other end of the phone, and really responsive, and it was really pleasant experience. It was pretty simple in the end. Yeah.
Yeah, oh, that's wonderful to hear. We often get some really good feedback from customers, so I'm really thrilled that you had a great experience as well. We do have over 3,000 customers with RIC Loans, so we do tend to do surveys and feedback from our customers, and most of them, like your similar experience, they've had a good experience with our team, but also they've managed to recover really quickly and, have that confidence again and in their business and the outlook, despite these major challenges that are unforeseen and are coming out of nowhere. So thank you for sharing your story. We might jump now and bring Mitch back in, and if you're happy, Rachel, if you just stick around, we might jump to some of our questions that are popping up now. So if others have any questions from the presentation today and want to join in the conversation, please use the Q&A feature at the top of your screen. Pop your questions in there and we'll endeavour to answer a few. If you're just noting that this is available on the desktop, so if you're watching via mobile, just please email or call us via those contact details there, so that you can have your questions individually answered. Just a reminder too, we have a poll as well before you drop off today. We won't keep you too much longer after this, but if you wouldn't mind just rating our webinar and just providing any other information about what you might like to see or hear from RIC. So questions. We've got one here from Mark. It's probably one for you, Mitch, I think. I have a client who completed a family succession agreement 3 years ago. As part of that agreement, they took on a significant portion of existing debt. Should we be looking at the RIC AgriStarter loan?
Yeah, thanks, Mel, and thanks, Mark. Very, very likely the AgriStarter succession loan would apply. The thing about, and that's the purpose of that loan, it's in loose terms to get good people onto the farm. That's for a new starter, and then keeping good people on the farm. That's a succession. The thing about the AgriStarter versus the farm investment loan is the AgriStarter, you don't need to show that there's been a significant financial impact. But the succession event needs to have been, within the last 3 years or so. So again, putting in an application, if you've nominated the wrong loan, we're happy to turn it around into the correct loan if there is a correct loan for it.
Okay. Another question that I've got here, Mitch, is when we talk about the farm investment loan, we often have part of our eligibility criteria around who can apply, needing to be able to sell into interstate markets.
Yeah.
Can you just explain what that means?
Yeah. And the reason for that is we're a federal government body, and we need to, in this product, show that people sell not just within their own state. Now, as I said, commodities such as livestock, meats, wool, grains, most of those go into a distributor or a wholesaler, marketer. We actually don't know where it goes from there, but we assume, and it's a safe assumption, that it is going to go nationally and internationally, because Australia is a net exporter. But I'm just even running through the horticultural type of commodities, blueberries, the nuts, they generally fall into national distribution supply chains. So we in fact rarely do decline a loan or deem a loan ineligible due to that, but it needs to be called out. So hopefully that explains. Look, if your own commodity that you're growing, you're not sure whether it fits the eligibility criteria, yeah, give us a buzz on the 1-800 number. We can talk through it.
Yeah, and I think that's a really good point too, that if there are individual circumstances, or you're reading our eligibility criteria online or talking to others and you're not quite sure, just to pick up the phone or even email us, and we can easily respond to you, and use our quick quiz, which is an eligibility checker tool. It's a very simple yes/no response, which just helps as a bit of a checklist in your mind in terms of showing what key criteria and requirements are needed before applying. Rachel, I might just bring you in here. Obviously, you've gone through some devastating times, and this is sometimes part and parcel of farming, but it seems like you've had more than most, unfortunately, in your area. What's your outlook for the future now and for farming?
Mel, it's really positive. We, referring back to RIC, as I said, we had a really pleasant and positive experience with them, and it has actually helped us frame our business plan to be stronger than what it probably was beforehand. So we are positive, and we were really relieved when we got the yes, like the tick, and that relief has kind of continued to flow on in our business. So you feel supported. We've got a great relationship with Nick. We've talked to him a heap of times since, even about some other ideas that we've had, and building that relationship with him, it's like having another trusted advisor, to be honest. So yeah, it has helped us to lift our chins up a little bit and just to stay positive, and that's the outlook that we've got, which is good, and it's going to stay that way.
Yeah, that's really good to hear that you've been able to overcome all of these setbacks and still have such a bright outlook on farming and your business. So yeah, it was good that RIC loans could help to do that. Was there any more questions that we need to answer today from Mitch or Rachel? Just pop them in. Did you want to add anything, Mitch?
Just that I tried to incorporate a few questions that were lodged within my little presentation, so I think I've addressed most of them.
Yes. There is one here from Linda. I might just address that one, Mitch. The level of enthusiasm of a borrower must present what exactly are you looking for here? In terms of what percentage does this relate to loan approval, in terms of outlook and being able to demonstrate, I suppose, the confidence and the planning, which Rachel spoke about as well within a farm business.
Yeah, look, it's running a business. It's more than just looking at spreadsheets and financial statements and statements of position. I guess wrapped up into the enthusiasm is just expressing your knowledge of your industry, of your property, of the markets. You where the industry is headed. The more you can express that, particularly in the conversation with with one of the RIC specialists, that as Rachel's mentioned, she had a good experience with Nick. So it's bring it out in that conversation. Don't be authentic. So hopefully that explains a little bit what we mean by be enthusiastic. At the end of the day, the lending decision is a human decision. We don't plug it into a mega computer and spit out through an algorithm and spit out a decision. It's a human decision at the end of the day. So nice knowing that there's a RIC loan is going to a passionate farmer who knows their business and knows their industry.
Yeah, good answer. Rachel, did you have anything further that you wanted to, any other messages for people listening today?
No, I think you guys have covered it all. It's been a really good session, and thank you for the opportunity to be part of it.
Yeah, well, thank you for joining us. It's always very important to hear from customers and to understand how our loans are actually making a difference to strengthen individual farm businesses, but also the ag industry. So thank you. Well, we don't have too much more. If you do have any other questions, please reach out to our team. Always happy to help. Thank you very much for everyone for joining us. Hopefully you've managed to be part of our polls because this feedback is really, really important for us to help to develop these sorts of programs into the future. So thank you very much. We will send out a replay of this session today. So look out in your email boxes for that one. And we might also send the survey as well, just in case you missed that. But thank you very much for joining us. Thanks, Mitch, for your expertise. And Rachel, lovely to meet you and lovely to hear your story and how you're going so well. All the best. Thank you.
Thanks, Mel.
Bye
Thanks
now.
all.